Okay, our chart of the day, it is Tesla. It has snapped that 13-day winning streak. Bryn, more than $200 billion in market cap added over that period of time. It's just astounding when you really put those numbers into context. 13 straight days, $200 billion in market cap. What do you do? By the way, target raised to 305 at RBC. Just give us the thought process of an investor in this name watching that run happen and what you think now.
Yeah, so, I mean, it's a volatile name. Obviously, Elon is everywhere, has his hands in so many different aspects. So I have half the position I just own outright, and the other half I sell calls against. And I keep getting those positions, which I'll sell like 15 to 20% out of the money calls, but the stock keeps moving higher. So that position will get taken away. So I have my core, and then with my other covered call, as the stock has moved higher, I am very comfortable selling calls against that. And if it gets called away, so be it. Because you have to understand, Tesla is probably the top option traded stock. It has been all year. And so there's a ton of option premium. And so for me, when there's a ton of option premium, I'm happy to like make a 25% trade between the upside and selling calls. To me, that's the comfortable way to play it, because I do agree, like, their margins are going to come down. You can walk through, there's going to be more competition. But I just really believe that Elon is the Thomas Edison of our time. And not only is he a great inventor, he's a great producer, and he can mass manufacture. And just look what's happening with GM and Ford. Like, for them to go to Tesla just tells you how superior their technology is, even down to their superchargers. So I just think it's a long-term hold. I love what he's doing. And I think that, you know, I own a Tesla, and that just, it's wonderful technology, and it's a fun car to drive.
Yeah, Robbie, how do you view this?
Well, listen, it's very hard to be invested in growth. If you're a manager that benchmarks yourself to the Russell 1000 growth index, and you don't, this is the stat, you don't own Tesla, Amazon, or NVIDIA, which are up on average 114% this year, they've accounted for 8.5% of the return. So you just don't own those. You're under by 8.5. You got to be pretty darn good to make up that underperformance.
But that's been the nature of the market this year, given the stocks that have run. When you look at, you know, discretionary as a sector, for a while was the second or third best sector. Why? Tesla and Amazon.
Yep.
And home builders, which had a great run too. But those two stocks alone carrying the weight of a whole sector, those group of stocks carrying the weight of, in some respects, the whole market.
And the question is, do you want to become a momentum investor or a fundamental-based investor? And in the question of NVIDIA,
that's a great question. How would you answer that? And I wonder if there are a whole mass group of investors who are rethinking what they are and what they want to be, and in some cases what they have to be in this kind of market.
You know, if you have a strategy, it's ultimately going to work out if you hold true to your discipline, because momentum will break down, and then you can get out of those names. Being fundamentally disciplined is incredibly tax efficient. It allows you to compound over time as long as the fundamentals stay healthy. So I think in the short run, you know, momentum's had its stay. It's likely to continue to have its day. Okay? In the intermediate run, I think you want to be mindful of fundamentals, which is exactly why we trimmed our Microsoft position a little bit, right? So we've done that throughout the year, where we've owned these big positions in our growth portfolio. The momentum has gotten tremendous, but then at some point, valuation becomes a ceiling.
Something tells me you're not backing up the tractor anytime soon for Tesla.
Well, I think you know what's on my mind, right? Why do I not own Tesla, but why do I own GM? And Rob just said something pretty smart here. You know, if you've got a strategy, you got to stick to it, all right? You got to stick to your knitting. It's actually something my father said to me a long time ago and drove it home, okay? Now, look, if I buy Tesla at any price, I can't tell you why that is the right price to buy it at. And I have to answer to clients when they say, look, it was 200, it went to 100, why did you buy it at 200? If I can't justify that, I won't do it. Now, in GM, in GM, I can justify it, and here's why. Besides the fact that the multiples are too low, besides the fact that the estimates are going up, here's the most important thing. They're buying back shares. This is where valuation matters to a guy like me, okay? They have the cash flow at this price to buy back shares, shrinking their share count 5% year over year at the last quarter, and they're doing it at 70% of book value. You know, I can go on and on about the autonomous vehicle, the cruise business, the electric vehicle business. I did get a Lyriq. It's a pretty sexy car. I mean, I really kind of like it. I do think their strategy is good, but at the end of the day, Scott, this is why valuation matters to me.
His strategy is going to work. Remember the late 90s. Momentum carried the day for a very long time, and then we entered the early part of the 2000s, and hedge funds became stars. Why? Because they're fundamentalist, and they were looking at all those stocks and identified all those stocks that were relatively inexpensive and began to explode.